Well, welcome, Stuart, once again. It's great to have you joining us all the way from Japan. Stuart Rutherford is the author of The Poor and Their Money and founder of SafeSave, a microfinance institution in Bangladesh. For more than 30 years, Mr. Rutherford has been talking to poor people about how they manage their money. And this has taken him to Africa, South America, Asia, and dozens of other countries. Welcome, Stuart.
Thank you very much. Good to be with you.
Fantastic. So, Stuart, let's start off with our first question. What exactly are financial diaries?
Right. Well, financial diaries are a research methodology whose purpose is to learn more about how poor people manage their money. And they do this by relying on a frequent, regular collection of data from a selected panel of respondents over an extended period.
Yes.
So these respondents keep what you might call diaries, simple notebooks in which they record the money that comes into their hands and the money that goes out of their hands. And trained field staff collect and query these data each time they visit the respondent. And then the data are entered into a database and analyzed and so on. So this data that we collect, it focuses on money transactions. How much money, from whom, to whom, for what purpose, where, and how was the money transferred? Was it in cash, by check, electronic, etc.? And when we analyze the data, we carefully distinguish financial flows, flows in and out of savings and loans and so on, from economic flows, by which I mean flows to do with income and expenditure. And we also collect non-financial data, especially if it's likely to affect money flow. For example, big family occasions like births, deaths, and marriages, and a job or loss of job or an accident, these kinds of things. So how often do we go and see these respondents? Well, we've done diaries that are daily, some that are weekly, some that are bi-monthly. And the period over which we do it can range from as little as 3 months up to a year or more. And the number of respondents in any one diary set tends to range from around 40 minimum up to 250, 300 or even more. So that's how we do them.
Now, Stuart, the financial diaries methodology you just described is really interesting. Why would you use the financial diaries methodology compared to, say, your traditional data collecting measures or tools such as surveys, for instance?
Good question. Yes, the financial diaries were first imagined by David Hume, who's a professor at Manchester University, and me in 1999. And then the next year I carried out the first diaries in Bangladesh. And then after that, some other players, notably a couple of firms based in the United States, Bankable Frontiers and Microfinance Opportunities, and also some academics, notably Rajalaxmi Kamath of Bangalore in India, developed and extended the methodology and have used it all around the world in Africa, Asia, North and South America, including the United States. Well, to get back to your question, I think there are two big advantages of financial diaries when you compare them with traditional one-off surveys. The first is due to the fact that finance is the interplay of time and money. So you cannot understand finance properly without looking at what happens to money over time. So repeated visits over a period of time are really the only way in which you can get a good quality understanding of what's happening to someone's finances. And then the second thing is that finance for all of us, whether we're rich or poor, is a deeply personal matter. And generally speaking, good quality data about finance can only be got if you take time to get to know your respondents well. And of course, by visiting them regularly, very, very frequently over a long period, that's an excellent way of gaining their trust and of getting rid of any misunderstandings. I should say, of course, You didn't ask about this, but we should make it clear that there are also some disadvantages compared to surveys. For example, in financial diaries, the sample size tends to be smaller. So that is why they're much less likely, the data that we get, the findings that we get, are much less likely to be statistically representative of very large populations in the way that traditional one-off surveys are, because they ask so many more people.
Well, fantastic. So you pioneered the thinking around financial diaries, and you also co-authored one of the most seminal books on financial inclusion called Portfolios of the Poor. Stuart, would like to learn from you, what exactly did you learn about the financial lives of the poor in Bangladesh, India, and South Africa?
Yes, those first diaries in Bangladesh and India were done in 2000, and they were designed to answer a very simple question. And that question was, do poor people have financial lives, as opposed to just living from hand to mouth, as it were? And if so, if they have financial lives, if they do engage in acts of saving and withdrawing and borrowing and repaying, what are those financial lives like? Now, today, that may seem a very naive question. We may all feel that we know the answer to that question. But back then, in 1999, in Bangladesh, it wasn't so clear, because the very rapidly growing microcredit industry was based on almost total ignorance of how poor people actually use their money, because nobody had done the research. So the first, and in some ways, the first really big and important finding from financial diaries is that, yes, poor people do have rich and complex financial lives. And then within that, we saw that the informal financial sector is extremely predominant, even in places like Bangladesh, where the microfinance industry was already getting large. A third big finding was that poor people have a strong propensity to save. The fourth was that poor people don't actually prioritize debt for businesses. So it's not true that all poor people are looking for a loan to start a business. They have lots of other things to do with their money. And the fifth, I think, was what we did in the book, which was to elaborate the three big money management problems that poor people face. One is managing money on a day-to-day basis. Second is coping with emergencies, when you need a big chunk of money to get yourself out of a fix. And the third is building large sums for the big expenditures of life. So in those first diaries, having answered that first big question, do poor people have financial lives? Later diaries were then able to explore other questions, some of them equally broad, some of them narrower. For example, we've had diaries that have looked at whether microcredit really does help urban women, poor urban women. We've had diaries that look at the place of mobile money transactions in the financial lives of people in East Africa. We've had financial diaries that look at how South Asian families finance their spending on energy, etc.
Well, great. Stuart, how important are these financial diaries in expanding financial inclusion? How do they influence the expansion of financial inclusion for, low-income households?
Yes. Well, to answer that question in the broadest way, it is diaries that have shown the breadth and complexities of the financial lives of poor people, and have therefore corrected the misunderstandings upon which early statements to serve the poor were often based. For example, just before we did the first diaries in Bangladesh, the leading microcredit organization in Bangladesh believed that poor people couldn't save and didn't need to save. They really only needed loans. And the financial diaries clearly showed that the financial lives of poor people show that that's not true. So from that, you can see that the specific answer to your question is that by looking at how poor people actually handle money, actually take loans, actually repay them, why they do it, how they save, how they withdraw, and thereby revealing their financial service needs, their financial service behavior, preferences, diary data can be used by regulators, by policymakers, by groups like your own, which promote financial services, and by providers of financial services themselves to improve the services they give to poor people.
Fantastic. Thank you so much, Stuart.
You're very welcome.